Welcome to the Stock Scores Market Minutes for October 2nd, 2017. This week's topic, trading nonsense, then the weekly market analysis, and finally the trade of the week on CAPR. Traders should focus on things that happen which don't make sense. So a company issues news, the news sounds great, and the stock goes down. Why does that happen? This tends to occur when you don't have all of the information. If everything you know indicates a stock should go up, but it doesn't, try to figure out why and realize that you're probably missing out on something. If the market does not make sense, you probably are not trading on the same information as the largest investors, those with the most influence. I actually find great opportunity when the market does things that doesn't make sense because the majority of people will be trading what makes sense to them, and then they'll all have to exit the position and go the other way once the new information comes out. So always keep that in mind when you see things that don't really make sense. All right, here is a chart of the S&P 500 30-day 60-minute chart. You can see we broke to new highs this week on Friday, and we had optimism. We were building that ascending triangle pattern. We talked about that. So this indicates the bull trend is continuing to run to the upside, and therefore you should remain a bull on the market short term, but also long term, because here's the long term chart. It's in that upward sloping channel. We've had some little pullbacks along the way, but really nothing major when you consider what the pullbacks have been like in the past. These pullbacks are so minor. This is a very low volatility market, trickling higher. There's not a lot of fear in the market. We'll talk about that in a moment. On to the Russell 2000, which I think is one of the notable charts this week because it has broken through to new highs out of this rectangle consolidation. Now it does so from some volatility, which increases the chance that it will pull back before it goes higher because it didn't break from low volatility. Had it broken back here from low volatility, it would have a more stable base. It doesn't have a stable base here. Doesn't mean I don't think it can do well. I just think it may be choppy along the way. But certainly the small cap area has been one that has provided a lot of good trades the last few weeks. On to the Canadian market, which has also seen a little bit of a rally in the last few weeks. You can see there the downward trend line was broken. We talked about that last week. And now we are in the short-term upward trend. Looks pretty solid. On the longer-term market, we had the break of the downward trend there. We're now going to come into this resistance. We don't have much more room until we hit that. And so I think one more good up week and then this market is going to stall. But I also think that it will stall and then break out because it has strong longer-term upward momentum. On to the TSX Venture, very low volatility right now, building this little ascending triangle. It has broken this downward trend line. So the buyers are slowly building strength, slowly building momentum, but they're not there yet. And until we get a breakout out of this trading range, I wouldn't get too excited about the Canadian micro caps, but something to definitely watch because the pattern is building in optimism. On to the TLT, which is U.S. Treasury bond market, and this is an indication of what interest rates are doing in the U.S., but also in the world because so much of the U.S. bond market affects how the world trades bonds. And there you can see the upward sloping channel like that. We're at the bottom of the channel where we should bounce, but we also are threatening to break down through the bottom of that channel. And if it does break the bottom of the channel, that means interest rates moving higher. So we'll have to watch this very closely. As I said, you can see here a number of times it's bounced off of it here. One week it went a little below, but it tends to bounce off of the bottom of that channel and then move up, and that means interest rates go down. So watch it very closely this week to see if it can hold that trend line. Now, I think this is a noteworthy chart. The US dollar has been very weak for basically all of 2017. Now, if we draw the trend line like this, then we're really just a long way below it. The shorter term trend line, which is like this, and remember this is a weekly chart, this has been broken this week. And so that is a sign that the US dollar is stabilizing. I actually bought some US dollars last week as it appears that the US dollar may be bottoming. I'm Canadian, so it makes sense to buy the US dollar from time to time. And I think we could see it rally up until it gets to this downward trend line, and then it'll probably stall. On to gold. Gold, with that strength in the US dollar, gets some weakness. And of course, gold has been strong with some of the political risks in the world as those things cool off, or at least as people stop caring about them so much. We've seen gold fall lower. Didn't quite make it up to resistance. It sort of hit this level of resistance there. I think we probably got another couple of down weeks until it hits this upward trend line. I wouldn't want to be in gold right now. It doesn't look that promising, but it may reverse with a little bit more weakness. On to the oil chart. This is the daily oil chart. I've been showing the weekly lately, but I wanted to show what's going on inside that weekly chart because it's actually broken this little downward trend line, and the energy ETFs, as I talked about in my newsletter last weekend, actually looked pretty good last week, and they continue to do well. I think we've got more upside in oil until we get up to this longer term resistance zone, so we'll keep an eye on that. And here's the fear chart, the VXX, which shows whether people are hedging risk with options on the futures market for the S&P 500, and it's at a very low level right now. That shows us that there is just not a lot of fear in the market. Some could say complacency, and so perhaps people will have to run for the exit door all at once if something bad should happen. No sign of that yet, so I remain bullish on stocks. So getting to our ratings then, US stocks bullish on both time frames, long and short. Canadian long-term, short-term also bullish. Gold, neutral long-term, bearish short-term. Oil, neutral long-term, bullish short-term, as it does look like it's got some upside to carry in the weeks ahead. Stocks trickle higher on light volume as the third quarter comes to a close, putting the emphasis in a week on earnings announcements. So 1 week from now, we'll start to see those earnings announcements roll out, probably get a little more volatility in the market. Canada continues to catch up, but will hit resistance soon. Gold is soft, but it is nearing support. And oil gathering momentum, but has pessimism to work through. Fear, relatively low. All right, let's look at the trade of the week. And I often talk about looking for abnormal activity, and usually I'll look for that on a day trading chart or on a 13-minute chart for a swing trade. But you can do it on daily charts as well. And the Stock Scores Market Scan has a tool to search for these. It's called the abnormal up strategy, or the abnormal volume and abnormal price filters in the market scan. And that's what made me find that stock right there. And it's gone for a huge run, now up over 130% since that break. I'll be doing a webinar this week on the Stock Scores indicator. So go to the Stock Scores website, make sure you register for that webinar. I'll show you that particular scanning filter as well as some others that can really help you identify these stocks. Well, that has been the Stock Scores Market Minutes for, what is the date? October 2nd, 2017. Have a great week in the market. Subscribe to the channel, tell your friends, like the video, and trade well.